Good afternoon and welcome to the Tissue REGENIX Group PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to CEO Daniel Lee. Good afternoon to you.
Good afternoon, and good afternoon to all of the attendees. Thank you for giving us the opportunity to update you on the progress we have made at Tissue REGENIX. We released our 2024 results, so we'll be spending the next hour not only presenting, discussing the company, our activities, the accomplishments we made in 2024, and our plans for the future. But then at the end, of course, we will take have time to answer questions from the audience. This is the disclaimer slide, which should be reviewed by all. Presenting today are myself and David Koch. I'm Daniel Lee. I was appointed the Chief Executive Officer for the Tissue REGENIX Group in November of 2020. I originally joined the Tissue REGENIX Group as the President of the U.S. operations in January of 2019. My background, I have a technical background, but I've had a career not only on the technical side, but also on the commercial as well as the business side. Over 30 years of experience in roles with medical device companies as well as biologic companies. Some of these were small startup companies, and some of these were also very well-established companies. With Tissue REGENIX, we have really a global opportunity to provide tissue-based allografts as well as xenografts to meet the needs for patients around the world. And not many companies have this opportunity. And this is certainly one of the reasons that encouraged me and enticed me to join this organization back in January of 2019. David?
Hey, thank you, Danny. I'm David Koch. I joined the group in January of 2021, so about 4.5 years ago. 30 years in the medical device space. I started, ran, and then ultimately sold a contract manufacturing company, worked with Danny at other companies before joining Tissue REGENIX. As part of our results, we announced my retirement. I plan to retire in the near future. I have some long-term health concerns to deal with. This is a very stressful job, and however, one of the things I always look forward to was this platform here, Investor Meet Company, and having the chance to interact with our private investors, because sometimes the questions we get are good for us and they're very challenging, and it's good to have a chance to have this natural back and forth with our investors. So look forward to chatting with you one more time today. Thank you.
Thank you, David. So a little bit of an overview of the company. So Tissue REGENIX, we are a global healthcare organization focused in the area of regenerative medicine. Regenerative medicine is a specific discipline of medicine that seeks to regrow, replace, repair cells, organs, and tissues using the body's innate ability to heal itself. At Tissue REGENIX, we've developed tissue-based scaffolds. Tissue-based scaffolds are an important part of that triad of tissue engineering, which encompasses cells, growth factors, and scaffolds. We produce our scaffold products using 2 core technology platforms, which both share the objective of preserving the inherent biologic, biochemical, or biomechanical properties of the tissue through a gentle processing process, but also produces a safe and sterile product. Our manufacturing capabilities are in the United States as well as in the UK. We have an extensive product portfolio, which is developed from numerous tissue platforms, which we'll discuss shortly. And we address diverse surgical markets and surgical indications. We have some significant strategic partnerships in the medical segments in which we participate, and we also have strong distributors in the markets in which we distribute products under our own label. The company is certainly well positioned to continue to be a contributor in transforming healthcare through regenerative medicine. David?
Hey, thanks, Danny. Just quick highlights of our 2024 results. As we already reported, overall, our group revenues increased by 9%. That was really driven by our D-cell business, which was up 23%. As we continue to see benefits from the kind of commercial reorganization that we put in place in 2022 and signed up new distributors to move our DermaPure product to acute care hospitals in the United States. BioRinse, we did face some headwinds in BioRinse. Historically, that group had led our growth rates, and we finished the year up 4%. And Daniel will discuss more of that as we move through the presentation. Very pleased to deliver a record adjusted EBITDA for the year, up over 150+% from the prior year. We reported our first ever annual operating profit for the year and finished the year with a cash position of 1.9 million. So, a solid year, even with some headwinds.
Thank you, David. Yeah. So some operational highlights from 2024. I think one of the things David and I have tried to do over the past several years is maintain the company's diversity and flexibility when it comes to how we operate in diverse medical markets. Our 4S strategy and the tactical growth pillars continue to drive the group. The 4 S's, for those of you who do not know, it stands for supply, sales revenue, sustainability, and scale. And again, this drives our organization from top to bottom. So starting with supply, as David's mentioned, we had some headwinds in our business. So we needed to adjust the donor tissue volumes and the mix, which was coming in the door in 2024. But despite that, that decrease in the donors' tissue coming in the door, our demand and the product mix, we did see double-digit increases in the overall number of donors that we processed, the units that we produced, as well as the units that we distributed. This mix did impact our overall revenue growth across the group. And we did see some decreases in specific product families, but we also saw increases in other product families. As David's already mentioned, our D-cell division performed well in 23 as the mix of products within that division allowed that group to grow 23% in 2024. Some of the milestones that we saw in 2024 were the extension of our relationship with Arthrex being one of the largest sports medicine companies, privately held sports medicine companies in the world. We saw the initiation of one of our growth pillars, which was market expansion with sales into the European Union. And then we also continue to see traction with our XT product, where we've shipped over 1,000 XT products into the markets in which we're currently distributing the product. The other milestone for the organization was we purchased the building and property, which figures prominently in our future growth and capacity expansion plans. And David will discuss that a little further in this presentation. So our product portfolio, as I mentioned, is categorized into two processing technology platforms, BioRinse as well as D-Cell. With each of these platforms, we do use a number of different tissue families. So with BioRinse, one of the tissue families is bone products. Our leading bone product is a product called Concentrate. It's a demineralized bone matrix product. It's distinguished in the marketplace by its ease of use and the way the product handles. But more importantly, that is a 100% bone product, which is verified for osteoinductivity. We test every single batch to make sure that it does demonstrate the opportunity to grow bone. And this is a very important feature in orthopedic, spine, or trauma applications. Another tissue platform that utilizes BioRinse is our birth tissue products. AmnioWorks is our leading product from birth tissue. It's an amniotic membrane known for its aesthetics, and it's currently clinically used in ophthalmology as well as other indications such as wound care. Then our D-Cell technology platform, processing platform, which came from the University of Leeds. The products that are processed using the D-Cell technology platform are characterized by the technology's ability to remove up to 99% of the DNA. A leading product in utilizing this technology is Dermapure, which is a human dermis product. Dermapure is noted for its excellent handling properties, as well as how it can be used. But it also has once it's implanted, clinicians note how the tissue is readily accepted and incorporated by the host, whether it's used internally or externally. So this could be utilized in wound care or urogynecology or other surgical indications. When you look at the market segments in which we participate, the independent market research confirms the growth of regenerative medicine. 3 of the surgical markets in which we participate, bone grafting, skin substitutes, and soft tissue repair, are all growing, experiencing single-digit growth and are multi-billion-dollar opportunities. We continue to have the opportunity to restore the quality of life in numerous surgical specialties and indications as we maximize the gift of human tissue donation, as well as expand the use of xenograft tissue in human surgery. Our organization is focused on the ongoing commercialization of our existing as well as new products to address unmet clinical needs. So one major event for our organization was a strategic review process. In the latter portion of 2024 through the first quarter of 2025, we conducted a strategic review process. We engaged a banker to explore opportunities with strategics and other logical candidates. The process was initiated as the company and the board believed that the stock market value of our company was not representative of the accomplishments of the organization over the prior 3 years. In November, we made public an announcement to confirm some media speculation, because our initial approach in looking at strategic partners was to go out to a limited number of potential partners. During the period of the strategic review, we continue to report positive developments for the organization. In January, we presented or released our early 2024 revenue and profitability estimates. We had a announcement regarding the extension of our strategic partnership with Arthrex. And then we also announced, of course, the issuance of some valuable IP, receipt of a European patent for one of our key processing platforms. Despite these positive developments, our share price fell and was not reflective of the company's value and should not be used as a base for a strategic transaction. So this represented some of the challenges of being an AIM-listed company. At this point, the board did not believe there was a prospect for an appropriate near-term offer, so we terminated the process in early April. So from that point on, our management team, our employees continue to focus on the growth of the company as a standalone entity and continue to drive shareholder value. So how are we doing that? I've already mentioned the 4 S's, but we've also added growth pillars. Growth pillars being focusing on our base business, tissue partnerships, market expansion, and regulatory evolution. So a little bit about our progress in each of those areas. With respect to our base business, we continue to grow our base business. As you've just heard, it's been mixed in 2024, some performing better than others. We continue to grow our supply of tissue, adding more recovery partners, and staying very competitive and with our ability to process more tissue. With respect to tissue partnerships, we work with other tissue processors, but we also, with any of our excess donor tissue, we've been able to establish relationships with domestic as well as outside the United States partners for our unprocessed tissue. With respect to market expansion, we began distribution outside the United States, and we've also signed agreements for additional markets around the globe. Our headwinds in that particular respect are the regulatory approvals, which have affected our ability to export the RDT tissue and/or finished goods. These are domestic, meaning domestic delays within the US FDA, as well as outside the United States delays with regulatory agencies in each respective market. Another growth pillar for us is our regulatory evolution. For the United States, historically, Tissue REGENIX, specifically our Cellrite group, is known as a human cell and tissue processor. In 2024, and with expected completion in 2025, we're changing our quality system to be ISO certified as a contract medical device manufacturer. This gives us additional flexibility into some of the activities in which we can participate, and also affects our ability to export tissue-based products into various markets. You know, when I talk about the regulatory delays, one of the announcements that we've made this year was our recent receipt of our EU MDR and the UK MDR for our OrthoPure XT, which is the only non-human xenograft product for ligament reconstruction. Moving from the Medical Device Directed, MDD, to MDR was a multi-year effort. The new MDR requirements are raised the bar in terms of safety as well as performance of products, and all medical device companies are required to meet the MDR requirements, and we're very happy to say that Tissue Regenix has achieved that, even as a small entity in the overall global as a medical device company. David?
Oh, thank you. I had to find the mute button. Just a quick update. We discussed this on our interim results, but in June of last year, we did end up purchasing our location at 1740 Universal City Boulevard here in San Antonio. It was when we leased the facility, we had an option to purchase it. As it turns out, that option was at a good value relative to the appraised value. I think, again, is one of the key things that this building purchase shows is kind of how far this company and this group have come, in that we were able to finance 100% of this purchase with a commercial bank here in San Antonio, and then seller financing, and something we couldn't have done when I started here in 2021. And the principal and interest payments, as compared to what we were paying in rent, are pretty pari passu. So it was almost a no-brainer to allow us to own the future of our business. We'd put millions of dollars into this facility. It's not something we're going to walk away from. So it just made perfect sense to own it and lock that in for the long term. Just a quick run through of the financials for the year. Again, our sales revenue up 9%, and the breakout as we discussed. And that significant growth in adjusted EBITDA and our first ever operating profit. Note that we did disclose kind of as an exceptional our expenses related to the strategic review, and excluded those from our adjusted EBITDA calculations. Also, just to point out, in our trading update in January, we did discuss the fact that we have taken the decision as the board to disposition our joint venture interest in GBMV. We discussed that in the trading update, but GBMV is a not-for-profit iBank in East Germany, or the former East Germany. So kind of unpack that. Not-for-profit makes it very difficult for any kind of value creation working with the rest of the company. iBank, it's not a tissue that we typically trade in, so there's no synergies there, and the marketplace is not one that we compete in. So it made perfect sense to look to disposition this lower margin, lower growing business moving forward. So as a result, the figures aren't included in our revenue and profit, and we have a one line item on the income statement related to that. But it will allow us to simplify our business moving forward, and it just makes perfect sense, our board believes. Looking at the balance sheet, again, we finished the period with $1.9 million in cash. We have a $10 million revolving line of credit facility with our lender MidCap. We've currently taken down $7 million of that, so there's $3 million there available to continue to fund the working capital. Inventories did go up significantly. Danny talked about the headwinds with our released donor tissue, and we took concrete steps to manage that in midpoint of 2024 as soon as that was realized, and we're working to reduce those figures and manage our inventories down back into line with the historic levels over time. And again, we processed significantly more donors this year than last. Danny?
Thanks, Dave. So in summary, our forest strategy and the growth pillars that have set the direction for the company, will continue to set the direction for the company, and provides a structure and clear direction for everything that we do. Our increased capacity and the efficiency improvements, give us the flexibility to pivot, when needed. In 2024, we had revenue growth over the prior year, and we're certainly positioned to maintain a growth trajectory in 2025. As I mentioned, regulatory approvals impacted our ability to export or import tissue products into various markets, into new markets, also with new partners. So we look forward to, as those approvals come online, that is certainly an upside for our overall business and business opportunities. One area that, as we've talked about, is the headwinds. The competitive reimbursement landscape dramatically impacted one of our strategic partners within a specific market segment. So what that means for us as an organization is we pivot. So we have the opportunity to look at additional markets, with those tissues, as well as with new partners. Overall, our revenues did increase in 2024, and we did note record profitability. So as we look forward, our expectations in these uncertain times is to continue to drive the growth of our organization, improve profitability, which we believe will drive shareholder value. So at this point, we are open to taking questions. I know a number of you have submitted questions. So,
Yes,
Alex,
Daniel,
I think
David, yeah, that is correct. I'll just jump back in, give you a little break. But thank you very much indeed for your presentation. I'm just going to turn on your cameras now. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via our investor dashboard. Daniel, David, as you can see, we have received a number of pre-submitted and live questions. And Daniel, if I may now hand back to you to chair the Q&A, read out the questions where appropriate to do so, and I'll pick up from you both at the end. Thank you.
I got the first one, Danny.
What's that? I don't see the questions. Where are they?
So on the right-hand side, are you out of full screen, Daniel, there? If you just, on the right-hand side, you see a blue button.
Oops.
I got it. I can read them, Danny.
Go ahead. I'll let David read the questions.
This is from, pre-submitted, doesn't have a name on it. And I guess before I begin and before we start with the Q&A, I always like to mention, I encourage all of our private investors to access the equity research report published by Cavendish, Chris Donnellan. It's available without cost. You just need to go to the Cavendish website and you can download that, and it's a good review of the results and something that we make available to all of our investors. So please take advantage of that. Okay, here's the question. I've been invested in REGENIX since its IPO in 2010 and have bought regularly. It's worrying that so much value has been lost as a result of leaving the results announcement until so late in the day, which has damaged confidence in the business. Having now seen the announcement, I can't identify where there has been a delay. Can you shed any light on this? And we've got several questions in this vein, and thank you. Let me run through what happened. So first of all, obviously there was nothing sinister going on. We had, if you want to call it, a perfect storm with our 2024 results. It began with our strategic process that went longer than anyone expected, and in that strategic process, I've got finite resources on my finance team, and they're monopolized dealing with that strategic review and all of the things that go along with that. So in addition, as a part of the strategic review, there was we couldn't really say anything about the business. We couldn't get equity coverage from any of our brokers on the stock. So it was the strategic process was a real problem with respect to resources and getting results out. And then to make matters worse, in March, my controller left the company, and so that left a gap. And in the United States, it's typical. People aren't on a 3-month notice period or a 6-month notice period. It's a 2-week notice period. And so when my controller left, that's a gap for us to fill. And luckily, we were able to have returned to the business. The finance manager who was here when I started, Brandon Largent, and really that was a great win for us with respect to somebody that was already up to speed and had been in the business for a couple of years. So Brandon came in and got up to speed quickly. Nevertheless, it took longer than anyone wanted, and we apologize for the delay, but pleased with the results that were reported there. Next question. With the share price trading near its 52-week low, what steps is management taking to improve market confidence and shareholder returns? Okay.
Well, certainly our share price continues to be a concern for management, our board, as well as our broker. We as a management team for the organization will focus on what we can do to drive shareholder value, which is what I mentioned. Obviously, continue to drive growth of the business, revenue growth of the business, as well as increase the profitability of the organization.
Next question. Why were the results delayed? I think we already addressed that. Next question. Inventory levels increased significantly in 2024. What steps are being taken to optimize inventory management and working capital? Kind of briefly touched on this before. We did notice an uptick driven in large part by our released donor tissue, as we had expected some markets to open up for us, and we're needed to have the tissue in place to support that. As a result of some of the regulatory headwinds, those markets took longer to open up than planned. So in 2024, we took concrete steps to manage our donor intake to put that more in line with what we needed from a processing perspective. We continue to work on opening new RDT markets and have recently had some significant success opening up new markets for the released donor tissue, and at the same time looking for other end-use markets for some of that tissue to put that to use here as finished products and drive sales revenue. So a number of ways we're looking at that process. Okay, here's from pre-submitted. This is a long one. We may break it down into little chunks. Why were sales of $3 million to the German JV taken out of the full year forecast at such a late stage? The board must have realized that this would deflate the share price that otherwise would have risen to 70p plus based on previous years. As I said earlier, we promptly announced the intent to disposition the German joint venture with GBMV when the board took that decision, and that was in January when it was announced. And again, not-for-profit iBank in East Germany. Not-for-profit, difficult to create value with a not-for-profit structure. iBank, not a tissue type that we have any synergies with here in any other parts of the group, and in a market, the former East Germany, where we don't have any really relevant commercial aspirations. And again, lower growth, lower margin business. So it was a relatively straightforward decision for the board to determine to move on with that asset. We had looked historically at ways to try to create value from that. It was just very, very difficult, and it's time for us to move on and simplify our business. Okay. In addition, the questionable strategic review could have been completed in 2 months if the intention was to test interest in an offer. On the face of it, the review process looks like a deliberate smokescreen, and given the fact that major shareholders have all held onto their shares during the alarming drop in share price, I would suggest that the real purpose of the review exercise was to enable the board and major shareholders to take the company private at a knockdown price by cheating small private shareholders out of a fair value for their shares. Please remember that when you announce the strategic review, you advise shareholders to do nothing when the share price was around 60p. Would the board please confirm that as a minimum, you will offer private shareholders 60p per share in the event that you take the company private? A lot to unpack there. I guess everyone is entitled to an opinion with respect to how long it takes to run a strategic process. So if you think you can do it in less than 2 months, and when you start one of these processes, you become beholden. It's a multi-party process, and so you don't get to set a timeline depending on the other parties involved. So the process took what the process took, and it's longer than anyone wanted, but that's what it had to do to get to the point where the board felt comfortable in making its decision. Danny, you want to chime in at all?
Yeah, so certainly, our board, cannot provide any guarantee of what levels or timing of a proposed liquidity event can take place. Our board has the duty to, do what's best for the company and the interests of the shareholders. But whatever will happen in the future, for this organization, it's the shareholders who end up deciding, what will happen. And, David and I, our job is to continue to successfully grow the operation with the overarching view of delivering value to our shareholders. As for our drop in the share price, we continue to focus on what we believe drives shareholder value, but the state of the small cap, the AIM market, hasn't necessarily been aligned with some of the things that we've been able to accomplish over the last few years. That was quite a multi-part question. Did we cover most of it?
I think so, yes. Next, may I ask why the late delivery results can also be misinterpreted as hiding company issues when they in fact seem to be pretty straightforward? I think we already addressed that question. What were the key outcomes from the strategic review, and will TRX need to raise further cash to drive further growth and profitability? What do you think the key outcomes? I think, Danny?
Yeah, so I think we already described the key outcomes of the strategic review. Was that, one of the issues is that we, because of what was going on in the AIM marketplace with respect to our share price, our board felt that any offer was not going to be appropriate for what the company, the true value of the company with the amount of progress we've made as an organization.
Next question, what strategy is the board implementing in order to improve the share price and shareholder value? We kind of discussed that already. Roger F. asks, why was there such an increase in third-party commission payments? Primarily driven out of D-cell business. And again, you saw the dramatic growth of that business, plus 23%. And we have third-party distributors that get typically a percentage of whatever they sell. In addition, another driving factor for that is some of our newer, higher growing products, our mesh products, carry a higher commission rate. And so that is why the commission dollars would be more up there. Danny, from Roger F. Do increased sales come from taking market share from established competitors, increased market, or having new products that meet previously unmet needs?
Probably a little bit of all of the above. So certainly, we believe that with the with some of our products, we are taking market share. When obviously over the past several years, and with a number of our products, when we grow at double-digit rates, we are taking market share when the market research is showing single-digit growth in specific markets, and we're growing faster than that. We are taking market share. And how are we doing that? Yes, it's with obviously a great product, a great platform, but we do continue to add to that platform. A lot of the things that we're doing, a lot of things that we have talked about in terms of becoming a medical device to be able to put together kits with our strategic partners, that gives us opportunities to expand how our products are used. So again, it's part of our growth pillars. Two of the growth pillars: expanding our market opportunities, and also looking at changing the company in terms of how we're regulated. So that's partially due to new products. And then what was there was another part of that question, David?
Taking market share, increased market, or having new products that meet previously unmet needs.
Yeah. So new markets, and obviously our expansion into Europe. There's unmet market need there. In Europe, the availability of tissue products is much lower than that here in the United States. I apologize, Dave. I wish I could see the question so I don't have to turn to you to.
No worries. Okay. From Roger F. Are there any initiative on Secretary Kennedy's desk that could have an important influence, for good or ill, on your business?
Yes. Right now there are a couple of guidance documents that the FDA had issued in the early part of 2025, which the industry, and I'm saying the whole tissue industry, are pushing back on. There were two guidance documents. One was regarding sepsis, and then there was another one regarding tuberculosis. I'll start with the easy one. The tuberculosis issue or guidance document came out as a result of another tissue processor who processed that product at an aseptically produced product. Aseptic production means that there is no terminal sterilization applied to that product. That product, unfortunately, transmitted tuberculosis to patients. So the FDA issued a new guidance document. For the most part, the tissue industry supports some of the aspects of that guidance document. Currently, they're not advocates for actually doing testing because there's no validated test. When a validated test becomes available, then I think the industry was, which is all about improving patient safety, would endorse that. So that's respect to the tuberculosis guidance document. Now, regarding sepsis, this is where the tissue industry, specifically the American Association of Tissue Banks, as well as the Organ Procurement Organization, that we're pushing back on. There are just aspects of that guidance document that would impact the opportunity, the availability of tissue. Sepsis is really not a problem when it comes to tissue that's processed and screened correctly. And so the need for this guidance document, where it would impact tissue availability, is just not warranted. Now, there is another.
Hey, Danny.
Yeah, go ahead.
But before you move on, I mean, haven't both of those kind of been put on hold of late? Or
well, they were delayed till July, so
yeah.
So it's coming up. Now, the other one is with respect to coverage of. There's something with CMS, which is more on the reimbursement side, which is under Mr. Kennedy, and they're looking at obviously what products are going to be reimbursed under outpatient wound care, and that has been a somewhat of a controversial area as the outpatient wound care industry has experienced some tremendous growth, but also has seen some very aggressive reimbursement.
Okay. We've got about 13. Okay. Quick one, for another one from Roger, then we need to move on to some others. What impact would there be on the business if as a result of the tax bill, there were cuts to Medicare or Medicaid?
I don't know. It's
I'm not aware of any cuts under consideration for Medicare, and for Medicaid, our D-cell business, I don't think has a lot of exposure there.
Yeah.
And most of so nothing overly concerning to me, but.
Right.
Quentin B. Are potential buyers squeamish? Is it that you are working with human body parts that doesn't allow potential buyers to recognize the value? An aging population needing more interventions, the prospects must be outstanding.
That's an interesting observation. I would have said that would have been the case maybe 25 years ago. A lot of your traditional medical device companies would not want to embrace human tissue, which are biologics. But as we've all seen, biologics, whether in the form of drugs or devices or various therapies, they're here to stay, and they will continue to grow. So if somebody's squeamish about getting involved, they're very short-sighted.
Okay. Nick K has a comment with respect to our website, and we continue to work on that. It is a work in process, and we'll look to improve that moving forward. Richard C., will you leave the A market? If not, why?
Currently, we will remain on the AIM market, and if our board, well as our advisors, believe that that is something that we should consider, that will be determined by the shareholders.
Frank G., can I just ask for clarification? Is going private your preferred option?
I don't think I have an opinion one way or the other. It's obviously at the end of the day, it is what our shareholders end up determining.
Agreed.
Well, look, Daniel, David, if I may just jump back in there, as I can see that you have addressed all those questions from investors today. And of course, the company can review all questions submitted today. I will publish those responses on the Investor Meet Company platform. But Daniel, before I redirect investors to provide you with their feedback, which I know is particularly important to the company, could I please just ask you for a few closing comments?
Sure. So we've completed 2024. We still continue to grow. We did demonstrate, record profitability for the organization. Obviously it's June or July 1st. We've had an eventful start for 2025, especially here in the United States. But certainly the company, with our flexibility, with our ability to participate in diverse market segments, we're poised to generate additional growth and amongst all of our divisions of the organization, and we will continue to demonstrate profitability. Again, both of these, we believe, will continue to drive shareholder value.
That's great, Daniel. David, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Tissue REGENIX Group PLC, we would like to thank you for attending today's presentation, and good afternoon to you all.